Hello everyone, this is Teddy Keckset from Forex Trading Unlocked, and we are here with a Forex Trading for Beginners webinar for you. Before we get into it, we just want to remind you that this webinar is for illustrative and educational purposes only. Also, if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, and our Twitch channel also, Forex Trading Unlocked. And when you also get a chance, go to Amazon.com and check out the book High Probable Japanese Candlestick Patterns, written by yours truly, Teddy Keckstedt. It's available in paperback and Kindle versions. All right, so let's get into the meat and potatoes of Forex trading for beginning. So one of the best places to start is at forex-trading-unlock.com. That is our company website. This is our home page. On the home page, we always have, when we're streaming live, we have, which right now we are, you can see what is going on as it is occurring. Then we also post our weekly analysis also, so you can just go to our home page and get that information right away. As a little breakdown about us, if you haven't already downloaded the NinjaTrader platform, I highly suggest that you use this. You can access it from any one of our pages. We have a NinjaTrader download tab. Also, from our tools, you can, from the navigation bar, click on the NinjaTrader platform or the multi-charts trading software platform. Great platforms to check out and use. NinjaTrader is free for all basic users for end-of-day data, and you can use it for Forex, futures, stocks, you name it. So, but for us, we prefer that you check out the Forex Trading Unlocked nav bar and go to the workstation page, because we have everything set up very convenient for you. From this page, you can start your day where you can check out our live streaming analysis. You can also then step and look at the calendar. You always want to be aware as a beginner, especially what is going on in the world as far as news events. The nice thing about our calendar is it's arranged on a daily basis and goes by the different countries. So you can see, like for instance here for the euro, you have the COVID-19 numbers. Then you have for Japan, you have large-scale retail sales yet coming out today. For New Zealand, you have this, and then you also have on the 31st, consumer confidence, blah, blah, blah. You can see how that goes. These are all brought to you by TradingView that we have access to on our website. The nice thing about using forex-trading-unlock.com is that you can see, as we're doing this live, there's not all kinds of pop-ups. You don't have all kinds of marketing ads and things like that that you would if you were to go to some of even these other sites like TradingView or what have you. So we try and keep it limited so that you can access this stuff from whether it be a cell phone or a tablet anywhere in the world, and you don't have to worry about logging into an account, and you can check analysis and get your news and actually do some functional things as well. So when you come down to this page, as you can see, we have it set up with the euro as our initial market. You can always change these at any time. Like here, we'll put in the US Dollar Jpy. As you can see, it then changes it, and it gives you all these other bits of information. We're going to go over that in just a second. So also you can pull up things like XAU USD, the gold. This is all live in action. The only thing that is delayed would be something, for instance, like CL1. Let's say you wanted to look at crude oil. Futures contracts are in delay. You can see that it says May 27th. So by law, you cannot have live futures data unless you're paying for it. So you can't broadcast live futures data. It has to be in delay. So that's the one thing that will be in delay on our website, but it is all free for everyone to use. And you can see how even from when you pull up these different markets, it gives you the curves, it gives you performance and how it's done on a weekly, a yearly basis. It has other technicals as far as whether it's in buy, neutral, and stuff like that. So these are all very useful tools that you can use. All right, whoops, put the wrong symbol on. Euro, US dollar. Okay, so once again, we get back to here, and you can see on a Forex basis that it gives you the current market quotes. So this is all live in action. Gives you some basic numbers, some performance numbers, and also some technicals. You can click on more technicals, and this will give you it on different breakdowns of, say, the monthly basis or the weekly basis. You can see how it changes, 15-minute, 1 minute, So there's all kinds of ways that you can get information like that readily at your fingertips. For time frames, for the charts, you can use access to right here. You can go on the hourly right here really quickly. You can go to the 30-minute, gives you different time frames, really quick accessibility. You can see that as the euro was trading lower into today's session, once the U.S. markets opened, it did like a balloon underwater. It bounced everything right back. A lot of this could be because we're in front of a holiday market. It could be a lot of profit taking going on in the U.S. Right now, currently, all the other markets are closed globally. So now let's go to the daily right here, and you can see that the Euro US dollar, which had probed new lows on the day, has had a nice bounce. The question is will this rally continue? I believe that at least going into the holiday market that you're probably going to see this trend continue going on into Tuesday, Wednesday morning. So remember that there is, markets are closed in the U.S. We click on this, make this a little bit bigger. You can see how easy it is to manipulate these charts. Like I said, as we're looking forward to do our analysis into the week to come, we're looking for this to make a higher move high off of this low. So why does he say that? Well, let's start with the very beginning thing that all Forex trading traders need to know, especially in the beginning, is you start with trend analysis. So as you can see here, the market bottomed out here in April. Just to make this a little clearer, we're going to go like this, and go like this. All right, so this right here is where the market bottomed. See this little circle right here? So this set this major low right here. Going into that point, the market had been trending lower, as you can obviously see, and then once it hit this point, it started to rally. Now, of course, in the initial beginning stages of this, you don't know if the market is bullish or bearish on the short run, because the market's going up. That is bullish, obviously. Bulls go up, bears go down. So what you do see, though, is once a few sessions occurred, you keep on making higher move highs. Every little pullback becomes a higher move low, and then we continue to make higher move highs, come back down a little bit, make a higher move low, and then boom, we come. And the trend is that higher move highs and higher move lows. It gets a little clearer as we get closer into these areas here. So for here, we have a high, and then see how we can mark with the text really easily. We have a low, and as you can see with those highlights now, it should stick out to you where these are highs and lows in the marketplace. Now when you have higher move highs and higher move lows, that is a uptrend. Now if it was the opposite, where you were making lower move highs and lower move lows, like for instance here where we had a high, we had a low, lower move high, lower move low, lower move high, lower move low. That is a downtrend. This is an uptrend. So that's one of the key things for basic analysis for Forex traders that you want to key off of, is establishing your trend. If you know what the trend is, then you can look for trades. There are counter trend trades and there are trend trades. Typically, especially for beginners, you want to focus on trend trades. To trade counter trend trades takes much more experience. They have a lower probability of success. So how you manage your risk in counter trend trades and trend trades is different. These are things that you learn as you expand your knowledge. Right now, this is all about for beginners. What do you have to focus on and look at? Basic fundamentals. Once you have these things down and you incorporate that into your discipline, which is your outlook for markets, and whichever markets you approach, every time you approach them, you need to do these things. If you skip over these steps, you are already setting yourself up for failure. So the very first thing for Forex traders, for beginning Forex traders, is to remember to acknowledge what the trend is. Now, this is a daily chart, so daily charts have a little less noise than, for instance, if you go down to, say, the hourly. See, the hourly all of a sudden is broken down. It's in much tighter ranges. There's a lot more noise going on. There's news events that come out. There's things that happen during the day that cause all kinds of gyrations where the market, for instance, here sells off real quick, but then it buys itself back up and comes back up here and starts to chop around. Then we get to a point here where in front of, like, say, the U.S. market opening, the market totally tanks. U.S. market opens, reverses gears in a big way. Does that mean that every time a market opens, that's what happens? Absolutely not. However, today the news was what it was. The whole world is settling down into the end of the week as the U.S. Is the anchor man for the Friday trade. So, and that's probably what's going on right here, is that you have a Friday rally going on because the other markets are closed. Now, if you go down to the 30-minute, you can even see even more gyrations. You know, it gets tighter and tighter and tighter. There's a lot more going on. 15-minute chart, look at this. This looks like there's a lot of activity. What you have to take into account, though, is look at the range. Like, for instance, these trading bars here, like if we look at this one right here, let me put the arrow so you can tell which one I'm talking about. Look at this green bar here. The low of that day, or of that bar, is $1.2166. You can see the low is this number right here, L. I have this bar highlighted. The low is $1.2166. The high is $1.2187. So that's only a 26 pip range. That's not a lot of market action. When you take a look at the daily basis, those bars are much more significant. So like today, the low is $1.2132 and the high is $1.2201. That's a 73 tick, or excuse me, a 67 tick range. So that's where you have to look at the differences. The scalability of the time frame has a lot to do with what's going on with these markets. So always be aware of your time frame and be aware of your trend as a beginning Forex trader. So these are the first dynamics that you want to learn, and then once you start to get those in a grip on those things, that's when you start to incorporate signals. Trading signals is a totally different thing to work with. The first thing you need to understand is market direction, what's going on. So, trend dynamics, usually the best way to start is to identify a major swing low or a major swing high, and then identify the highs and lows and figure out whether or not they are consistently making higher move highs and higher move lows, or if they're making lower move highs and lower move lows. Another thing to do once you have established that is when you find your lows, for instance here, you can connect them and you find the support. Now today is a good indication of where the market opened up. It was riding this upward sloping support and boom, it tanked, came all the way down and then shot back up, and now it's positive on the day. So does that mean that support has failed? Not necessarily. There was a big extreme test of support and the market snapped back. However, it does show that the market was trying to establish what? A higher move low. After all, here is a high. Okay, so here was our higher move low here, and then here we have our higher move high up here, and now we're looking for the next higher move low. And that's when you start to figure out, is it going to be a new buy signal, or is it just a place where the market starts to establish a intermediate churning trade. Remember that markets do digest. They don't just go from a low and then start making highs. They sometimes start to settle into a sideways pattern. So you never know about that, when that is going to occur. There are indicators you can use that sometimes help. Remember now, when it comes to indicators, there are so many different types of indicators. You can go indicator nuts. As a beginning Forex trader, I would suggest that if you're going to use indicators, you stick with something very basic. One of them would be a stochastic. Okay, so the stochastic here is an overbought, oversold indicator. As you can see here, when it's in this lower range here, that's when it starts to come into a buying zone. Now, when it gets into the upper part here, that's when you're looking for a selling indicator. Now, the thing about these is about indicators themselves is a lot of them are lagging, meaning that the market will turn beforehand. As you can see here, the market had been trending lower for a while. Like if you look at here, this indicator was already trending in the oversold territory. Everything down here is oversold, everything to the top is overbought. So had you started to look to buy when this indicator started to be in the oversold territory, you would have bought into this area, and then you would have been losing money. Okay, so you have to be mindful of indicators. They're very lagging. They do help. Usually what you want is you want to have more than one indicator lining up to give you an idea of what is going on. So if you do that, then that changes the whole dichotomy of what's going on with your analysis then, because then you can start to use it where it becomes very functional. Okay, and that's one of the key things that you want to do when it comes to your analysis. So first we identified the low, then we identified the higher move highs and higher move lows, confirming that we have a bull trend. Now, as you can see, is that since we knew we were in a bull trend, your indicator here tried to have a little sell signal. When these lines cross, that's when they start to indicate that the market is selling off. Now, if you would have used this first crossover here, just like if you would have used this first buy over here, you would have been losing money. So the key is, when do you know that this is not going to really be this and actually sell off, or when this is this, when it does sell off? Well, there's lots of different ways to figure that out. Now, just like here, as we're making this higher move high here that we had just made recently, you can see now we sold off for the last couple of days. It's starting to grind here, and it looks like, oh, the indicator is looking like the market wants to sell off. Could be, maybe not. Remember that since we're in a bull market, we've been making higher move lows. So as the market sells off, it doesn't sell off very much before it returns to the trend. And that's why you got to remember, when you're, like for instance in this case, where we're in an uptrend and we're using an indicator, when it starts to say it's overbought and it's ready to sell off, remember that's a counter trend trade. Now, for instance here, where we knew the trend was up, and here we had this crossover right here. See where this low is here? And this cross and started to go back to overbought. That was a fairly decent buy signal because you're in a trend trade. This cross goes in the direction of the trend. And then as you can see, the market made another rally and exploded to the upside. So it'll be interesting to see if you can, if you're catching on here as we add this next indicator and see where we're going with this one. So now, one of the keys to knowing the market direction, like I said, is using these indicators. Now let's use a combination here. So we're going to pull up another really popular indicator, the relative strength index. So now we have the stochastic, which is the first indicator here, and then we have the relative strength index. Now notice this one. You have your oversold indicator layers down here near the bottom, and you have your overbought indicators here towards the top. Now see how when we had this low here, this crossed here, this was on the bottom, they both kind of worked together. Then here they did the same. Okay, now this one doesn't have any crossovers, but when you line these up together, they do give you some short-term buy points. Now this one did work for a couple sessions, it just didn't hold out for a very long time. So initial corrections, and that was also, think about this was a bear trend. So when you had this crossover, it only lasted for a couple sessions. That's a corrective move. It was a counter trend. So counter trend moves don't give you these big long crossovers here for these indicators. So in a bear market, you would expect the initial crosses usually to be a corrective trade. Should they be that, that's when they become this stuff here, and then you know that it was only that. When they start to go like this, then you know that it is more than a corrective trade. Like this is where there was a trend reversal. Okay, so with this one, you can see this was in the oversold territory, this was in the oversold territory, and then we get this big rally here with this. Now, as you can see here, see where this crossed here? This was already in the overbought territory in a big way, and then the lines crossed for a sell. Well, this trend kept on continuing higher. But look at the relative strength. If you notice this one, yeah, it was heading towards oversold, overbought, but it hadn't turned yet. This one was turning, and this one was stabilizing. This one here, when it went sideways, it did start to move down a little bit, but it didn't matter because the trend itself had been going higher and higher every day. So that's when you know it's most likely digesting, or the momentum is so strong that these indicators are always lagging, that the numbers start to skew in the overbought or oversold area. That's why you need to incorporate other techniques to know when you do your initial entry for buys and sells. So now here, this one here is another one where it crosses. This starts to get in the middle. It gets really tough to read these indicators. So these are things when the market is trending on major extremes. You can use these to help give you an idea of when the market turns. But remember that there's a lot of noise to filter out where they can also continue the trend, and these just don't give you any valid signals. These will try and point you in the direction of another direction, excuse me, when the market is actually continuing either to the upside or the downside. So let's get rid of this. Let's make this chart a little clearer. So once again, we see that indicators are very lagging. Okay, so now when they line up together, they do help to give you an idea of buy and sell signals. However, they are always in the lag. Now, I always say that the best indicator of the market is the market itself. Now, at the beginning of this webinar, I told you about a book, High Probable Japanese Candlestick Patterns, which, by the way, if you want to access our products, courses, and services here on forex-trading-unlocked.com, you come down on this part of the tab. It says High Probable Japanese Candlestick Patterns. That will teach you, give you access to a little bit of the book. You can see how the writing style is, and you can get more information about it. And in that book, we highlight how to trade these signals. So wait, let's make this a little clearer here. Let's make a different arrow. Okay, so this little red bar right here, just below the high. Okay, the previous day it made a high, then we have this sell-off. This is called a bearish, and bearish always means lower, engulfing line sell signal. Oops, not engulfing line. Okay, so what is a bearish engulfing line sell signal? It's a high probable Japanese candlestick patterns, and it happens to be one of the most popular and highest value as far as being a good signal. It's probably one of the, I would say, besides being in the top 10, it's probably more in the top 3 as well. They are very significant. They work in all markets. Now, time frames is a big thing you need to be concerned about. You learn which time frames to use these in the book, High Probable Japanese Candlestick Patterns. And just because they occur doesn't mean that they are a signal. You have to know when to exercise these. So let's give you a little clue and a heads up on how to do so. So right here we had this sell signal, and as you can see from once this day was over, and what this is a down day. See how this is red? When we're trending up, these are green bars. The down days are the red bars. So bearish engulfing line is a down day. Okay, so bearish down, bullish up. It would be the opposite if it was a bullish engulfing line. So what is a bearish engulfing line? Well, if you take a look, it didn't make a higher move high on the day, but this body, the colored part of the body, when you see it red like this, that means this is the opening, this area here. This is where it closed. Conversely, on an up day where it's green, you can see that that's where it opened. The market traded a little lower. That's the little candle wick there. And then it settled up here, and the candle wick there shows you the high of the day, but that's where it closed. So on this particular day, the market had opened, had traded a little higher after it had opened, then it traded lower all day long, made a low of the day, and then settled just above it. So that would be your bearish engulfing line, because this body, this candle body, not the wicks, the body, it encompassed the whole trading range of the day before. So if it encompasses the whole range plus a little bit more, then that sets it up to become what is called the bearish engulfing line. Okay, so now this is a great sell signal that we like to use in all market time frames. Now the question is, how far does it go down? So this is a daily chart, so you would have a daily projection for a downside target. Now for this is a beginning Forex traders lesson. We are not going to get into the actuating of these signals. That's a whole lesson in itself. Like I said, check out the book, High Probable Japanese Candlestick Patterns. You can access it through the navigation bar on our website or from Amazon.com. And that gives you full instructions on how to trade that particular signal as well as other signals. So, but this is something that I want you to know as a basic Forex trader before you start pulling the trigger is you need to know these kinds of analysis. So remember we were talking about indicators. So why am I using this one? Well, this is an actual signal. So now let's go back to our indicators. All right, so let's pull up the stochastic. And remember, when these lines cross, that's when you're looking for a buy or a sell signal. Now, interestingly enough, and we'll put a vertical line here. So this day, that's the wrong color to use, though. Let's use not green. Okay. So as you can see, we have the bearish engulfing line, this red day. This line here shows you where this indicator is. Now, when we had this crossover here, there was no sell signal. We had the indicator indicating that it was overbought and ready to sell off, but the trend kept on going. Once again, we finally had a crossover. This is a big down day. It's not a bearish engulfing line. This is a sell pattern here, but it's a very minor sell signal. It did line up with this cross, but still not a very valid one. Now, when we use something like a bearish engulfing line, oops, we can spell this correctly. Sorry about that, folks. The bearish engulfing line, we know that at that point, if the market has obviously been railing into a bearish engulfing line. A bearish engulfing line is when you have a reversal to the downside. It is a very valid signal. Does it fail? All signals fail every once in a while. This one, on an average, though, is very successful, at least in the short run, to even the intermediate term where it does hit its initial target signals, downside targets in this case. So, since we have a signal and we have an indicator that was already showing us that it was overbought, and then it crosses, that makes us very, very sure of ourselves that a short-term corrective trade is developing or has developed. Okay, so now you would look to see the market travel down to an expected target area. Finding targets and things like that off of trading signals is a whole nother webinar in itself, but right now we are showing you how in the beginning as a Forex trader you need to encompass these things and also understand how they work and are interrelated. There are lots of instructors out there that will say, hey, set the stochastics to this number and filter it. We didn't even filter the variables of how these lines work. You can skew these where they don't have as many crossovers, where you filter it, you optimize it basically, and you can optimize any indicator all you want, which is good because certain markets you have to fine tune them because they behave differently than other markets. Every market has its own nuances. So just as we can see here from the stochastics where they cross over, and then with this signal, boom, this is the one that is valid. So because this one here, we didn't have a signal, we just had an indicator giving us a reason. Now let's also pull up something else. We'll go back to our relative strength index. This one here was in the middle, and this one wasn't really giving us any reason. So this is a thing where, see, if we were just relying on the two indicators, we would have one that gives us a sell, one that's in the medium chop zone that really would say, do we take this trade or do we not take this trade? This would give us no information. It would be a mixed bag of goods. But with this indicator lining up with this sell signal, that gives us a confirmation that, yes, we are looking for a short-term turn in the market for a corrective move that would target, certain levels. Now, no matter what, this doesn't mean that we are looking for the market to become a big bear and all of a sudden it's doom and gloom and the market has turned. Remember, we're not trying to pick a top, and we never want to try and pick a top or a bottom anyhow. This would be just a time where the market had been railing. It gives you a setup for a very good, low risk, high probability sell trade. Conversely, this could be done also to the as a buy trade as well, for a bullish engulfing line. So this is a very simple way of incorporating your trend dynamics, which no matter what is number one. So your indicator here, this is one of the last things that you look for. These things you can definitely use, and I do highly suggest that as a beginner you use them. But remember, there's a lot of noise that can be happening. And another thing is, be careful of smaller time frames. If you think that this is hard to read and hard to digest and figure out, this is on a daily basis. The daily, the weekly, the monthly, they're not as hard to read as if you start getting into, say, the shorter time frames like an hourly or a half-hour chart or a 15-minute chart. There's a lot to filter out. There's a lot of unnecessary noise, and I highly suggest as a Forex trading beginner that you stay away from such types of time frames. Trade the longer term. It's like this. Think of it as if you know people who are big gamblers, they'd have all these parlays and this and this and that, and they're like, oh, if I would have just done this, or if this just hit, I would have gotten paid. Well, those are all gamblers. They're all would have, could have, shouldas. They're good, rich quickers, looking for the quick kill. That does not happen. Okay, over time, you're going to get buried doing that. However, if you wait for the market to come to you, wait for very good, valid trade setups, definitely use very good discipline in your risk management, then you put the odds in your favor. And then when you incorporate having very high probable sell signals and buy signals on top of that with good money management and trade selection, then you start to open the doors to where you can become a successful Forex trader, or any trader of any market for that matter. So that is something that you want to always have in your forefront, because trading is not gambling. So let's get rid of these two things here. So once again, trend dynamics. Always know whether the market is going up or whether the market is going down. When you have higher move highs and higher move lows, that's when you're looking for, in this case, you'll be looking for a sell signal as you make higher move highs, which we did here, and it became a bearish engulfing line. Now, for instance, as the market was going here, there were other times where it started to sell off and came back here. Why wouldn't we sell here? We didn't have a signal, okay? Then the market bounced here. Why didn't we buy? Why wouldn't we buy here? Well, at this point, we have no signal. But here, as the market was continuing to trend higher, and now all of a sudden we have a sell-off, a counter-trend trade, because of the way it shaped up and the way it formed up, that gave us our entry into the market. And that's what you want. You want clarity. You don't want to be subjective as a beginning Forex trader. So this lesson, I hope, has really sunk in. This is a very basic lesson, and the reason that we are focusing on trend dynamics is, without trend dynamics, you can go back up here, all these numbers and economic numbers that you need to be aware of, especially the big ones that come out, they're not going to mean anything. You're not going to understand how to trade those numbers, what the kind of influence they may have during these areas here before you get to a signal. Another thing is, for instance, when you have a signal like this that lines up where, for instance, you have big news, which we did. We had some big oil numbers 3 days ago on Wednesday, and some other things that came into fruition, which maybe that's what caused that sell signal. So the news events you need to be aware of, and especially when you have these signals that are going with counter trend information, those things line up with those other indicators like we showed you, and then shabam, you have a valid sell signal. Now, as you can see, this one came down to our initial target, or just shy of it. If you read the book High Probable Japanese Candlestick Patterns, you would know what that is. And then here you can see how it bounced today. Originally this was much lower on the day. Now it's stronger. It doesn't mean that it's not going to fall apart on Sunday night when the markets open up, because right now it's a Friday and the trade is winding down. It's a lot of the reasons why we're doing this webinar now, because it's a little bit quieter of a trade. So the key thing, once again, is to remember your trend dynamics here. For beginners, if you don't do that first, guess what? You're going to be on the wrong side. So for instance, like one of the reasons I stress trend dynamics is that you want to know if your trade is in with the trend or if it's a counter trend trade. In this case, it's a counter trend trade. So in this case, when you are in a counter trend trade, your expectations for targets also is much more restrictive. In this case, we would be looking for shorter term targets versus longer term targets. Now, there's all kinds of ways to find targets, and I'm going to give you one of the best and quickest ways right now. So number one, we have the 50% rule. This has been valid for traders for a very, very long time. Okay, now what is the 50% rule? So you take, I'm going to have to throw a horizontal line here. So this point right here is the 50% line. So what am I babbling about? So see this low here? This was a major low here that set this trend, okay? Here's a good short-term low also. That there was a big correction here. The most noticeable correction in the past month and a half was this one here to this down into this low right here. Okay, so from here, as we continued to rally, we made higher move highs, higher move lows. Okay, so there is our trend. Any sell trade, once again, is a counter trend trade. So when you're looking for a counter trend trade, you got to figure that it's not going to go that far because eventually the upward bullish momentum is going to pull the market back up. So 50%, if you take this low, the value here, which is $1.1985, and you go to this high from 4 sessions ago, right up here, this last high, that's at $1.2266. That gives you $1.2125 area as your 50% mark. Markets tend to, when they sell off and correct, a lot of times they gravitate towards the 50% area. This did not touch it, but let's see what the low is. The low is $1.2132, and so it's only 7 pips off. When it comes to markets, you're not always going to hit your target to the point. Sometimes it's going to go through it, sometimes it's going to fall just shy of it. Now in this case, this is big information because the fact that it fell just shy of it means that the 50% is good support. We're looking for a higher move low. I mean, we're not going to say right now, we are looking for the pattern to continue, which is a higher move high, higher move low, higher move high, higher move low. We're coming off a higher move high. We're expecting the sell-off because of the sell signal, but we're also looking for it to come and make a potential higher move low. Okay, so that's the big question, if you will. Is this a higher move low that was established today, and then we're going to go make a run for higher move highs? Is the sell signal over, or is the market going to digest a little bit, settle where it is today, and then on the next trading session come back down and test support? Well, anything can happen. We've already seen that most of the market action from our sell signal is hit. Because it's a counter trend trade, we're expecting it to only go so far. So you wouldn't expect it to come all the way down to 120 or 119.5, all the way down in this area. Could it? Absolutely. This could be the top of a new trend that becomes bearish over the next few weeks. But we're only into it for a couple of days. And since it's a counter trend trade, you want to take the money and run as soon as you can. So this would be a case where, for instance, today where it had fallen just shy of a couple ticks or pips, excuse me, for Forex away from the target, you may have wanted to exit the trade had you been short on that signal. Also, if you're being disciplined, once it hits very close to the sell that your target, usually you want to lower your protective stops. So in this case, for instance, and this is something you always want to take into account, since you sold the market, and in this case, the entry price would have been the close of this day, which was $1.2192. Had you sold $1.2192, your stop would have been up, which was the high of this day here. So that's $1.2266. So initially, you would have sold that area right here, $1.2123-ish area. You'd have the $1.2266 as your stop. Now, once you came down to this area, you would want to lower it. Now, these are things that starts to get into the actual mechanics of trading. This is a video for beginners where when you are a beginner, you should not be trading whatsoever. You should not even have an account, okay? Because you can get into paper trading. Paper trading is a crutch if you do not follow it the same way you would do when it's reality. You don't. If you're paper trading, usually you have an account size that's much bigger than what you would be trading normally. So it is a false sense of security in a lot of ways, and also you wouldn't behave the way you do when you're when the markets are real. So that's something you want to. As we give you other beginner Forex videos here that we will get into how to manage those things. But right now, when you're a beginner starting out, these are the fundamentals that you need to watch and know and understand. And when you have a grasp of them and have seen the markets move for a while and see how these things manifest, that's when you start to get into the paper trading and then eventually get into real trading. Because there's a lot of things that you have to master before you get into trading. One is money management. It is the #1 rule. But before you learn money management, you need to know what you're managing and what kind of risks are entailed. And you don't learn that until you study the markets and learn the dynamics first. And then the money management will start to become really clear as to not just what kind of profitability potential you have, because there is always a profit potential, but also what's your risk potential? What is your potential risk of loss? What is your potential risk of failure? You know, for instance, one of the biggest problems I encounter with beginning and experienced traders is their lack of discipline when it comes to money management. If you treat trading like gambling, it is gambling. If you treat trading like a business, you will have the same type of results that you have in a business, where there are ups and downs, but you have the potential to be successful and to be profitable. If you treat trading like gambling, I will promise you that in the long run, you will lose. You may have some great swings to the upside and bring in all kinds of money, but eventually, with that kind of behavior, you will lose money, and you will eventually end up failing at the trading business. So, since we have shown you these different basic trend dynamic steps, for all of you that are watching the video, leave questions. We will answer them in the comment sections of the YouTube video. Remember to subscribe to our YouTube channel also. That way you are then that way you know when we have future videos that will be released. So this one was about trend dynamics and the introduction of the basic things that you need to be aware of for trading Forex. So remember, the first thing is paying attention to the trend. Then as far as, remember how we lined up the indicators, you want to have more than one that helps to give you an idea of when the trend dynamics start to fluctuate off of new highs and new lows, or new lows and new highs, depending if you're a bull or a bear. You know, those are very important. And then what's even more important is to have a valid trigger point. So you need to have your trend dynamics, you have to have your plan, but you need to have a valid entry and entry signal for whether it is a bearish signal or a bullish signal to help you incorporate into your trading system. Okay, so you need to have a system that you follow, and you follow it always like a robot. Never be subjective, because once you become subjective, then you don't have a system. What you have is you gambling in the marketplace. Okay, so subjectivity, throw that out the window. Trade like a robot. First, find your trend, define your trend, see how it's moving, and then you want to look for a signal that either, in this case, is a counter trend signal, or you look for where this market is overall a bull, making higher move highs and higher move lows. You wait for a sell-off, and then if sometimes there's a signal, like here, this was a low-risk buy signal. Now this is a counter trend because of the sell in the short run, but in the longer run, a buy signal here is with the trend. So this one, as you can see here, you had a nice explosive move to the upside. Then even though it corrected, it stayed above this area here and is now much higher overall. That's where, when you're trading the action of the trend, it's very big. So then when you have, let's say instead of having a bearish engulfing line sell signal here, you had the market has been correcting lower, like in this, let's say if this was here a bullish engulfing line, which, by the way, it is. Was wondering if anyone here who's watching the video would be like, hey, you know, you said that's also a signal. See this little buy right there, this little green bar? Here we had the market break down for 1, 2, 3, 4, 5 sessions, and then boom, here's your bullish engulfing line. Look at this, made a higher move high. See what I'm saying? So we started out with the bearish engulfing line, trying to show you once again how these signals could line up, or how a signal will tell you when a turn in the market or which way to direction you want to trade. But see, it goes also here. So since we've seen who is sleeping and who is not, let's go back to our indicators and see how these line up. Now this is all live, folks. I'm not making this up. The markets are trading right now. Oops, that's the wrong one. We want the stochastic without the RSI. The stochastic, there we go. Okay, so see how we have the bullish engulfing line, buy signal right there. Look at where it lines up right there with this cross. So once again, when you have these crossings, this is how you knew which one to trade. We had our high probable Japanese candlestick pattern that came in and told us to do so. Is this starting to become clear to you folks? I would hope so. I think that now you can see where you use your indicators here, but when you incorporate them with, oops, there we go. When you incorporate this buy signal here or this sell signal here, and they line up with these indicators, then all of a sudden you got your trade. So this would have been an indication here, or this is what would have happened if you follow our methodology here. You have the patience, you see the trend here is developing, it's a bull, you're not in the market right here. Here we had to start, we began a correction here. You know that this is a counter trend wave right here. So right here, because you've been making higher move highs and higher move lows, you're looking for off this higher move high for us to find support. Well, the market did. Here was your buy signal. Just as here you had the market, it was oversold for so long, but look at, you would have gotten killed trying to sell, all during this period right here. You wouldn't have made any money. You would have gotten chopped up. But once the market had turned, and this was a short-term sell signal, very weak one, came into this here, and then here, the indicator, it turns. Now it's in this middle noise part. When it's in this thing, you never know whether these are valid buy or sell signals here. Usually you have to trade the ones that are above here or below here. But here we had this bullish engulfing line. And I'll write that into a little thing here. Bullish engulfing line. Oops. Buy signal. All right, so this is all live, folks. This webinar is not being created and laid out with pictures that just suit our needs. We are doing this, as always, on the cuff for you to show you how these things work. So you have your bullish engulfing lines, buy signal that popped in. Now, what does this mean? Remember, we're in a bullish trend, so this is a bullish trade. So you're trading the action, and the action is the trend. That's where you get your biggest bang for your buck, your biggest pop. You would have hit your initial targets. On this one, you could have taken profits, or in this case, since it's with the trend, you may hold on to it for an even longer time, where now you would have hit your initial targets and now the market's even higher. So giving you all kinds of opportunity to see how these things work. I'll make this chart a little bit bigger as we wind down this one for you. So once again, see how we had the bullish engulfing line that went with the trend. We had the stochastic crossover, and here we made a higher move high, then a higher move low, higher move highs into the past recent sessions. Now we're looking for a higher move low because we're not trying to call a turn in the market, even though we have a bearish engulfing line sell signal. We're expecting this just to be a correction like this was down into this area here. And then who knows, maybe it fell just short of this target. Maybe it's done. I would say probably give it a little bit more time over the next couple sessions, see if it gets through this target here, and then look for a chance to buy. once again, or who knows, maybe the market is turning overall. There's all kinds of fundamental geopolitical things to work into the marketplace as well. That gets a little bit more advanced. That's for advanced Forex traders to focus on. Keep it simple. This is a video for beginning Forex traders. We want to thank you very much for listening to this video and watching it. Watch it again. These are very simple key points that if you use them, they can be a very good foundation for the basis of your trading moving forward. To not incorporate these simple, very basic fundamentals, you are setting yourself up for less chances of profitability and success in the future. Based off of 30 plus years experience in the business, just like in any sport, a fundamental is key. Think about it like this: when teams are not performing well, I don't care whether you're a football player, a baseball player, a basketball player, a hockey player, what do the coaches do when you're losing games? They get you back to practicing fundamentals. Why? It's not to punish you. It's because fundamentals are the base for winning, for the base for foundation of all structures built have to be solid. Without the fundamentals, the foundation, you cannot last. So these are big things. I know you're saying, why doesn't he give us more information on this or that? There are videos coming up, and if you look at our other videos on our YouTube channel, you can see other lessons. But for a beginning Forex trader, I cannot stress it enough. If you do not follow trend dynamics initially and focus on that, and then incorporating whatever indicator you want, you can do that. But then you really want to have something even more. You got to have a valid reason for entry, and whether it is bullish or bearish. High probable Japanese candlestick patterns, I rely on them. They work. I've been using them for decades, but there's a proper way to apply them. Read the book High Probable Japanese Candlestick Patterns. That will help you out. Remember, you can access that from our navigation bar. You go to the products, courses, and services bar here. You go to High Probable Japanese Candlestick Patterns, and that will show you what's going on. So in fact, what I'll do is I'll pull up another one because I don't want to lose the chart. You hit the High Probable Japanese Candlestick Patterns on our website, forex-trading-unlocked.com. There's a little video here about high probable Japanese candlestick patterns that you can watch on our website here. And then here it has a cover of the book. You can either buy it, you can share it, and you can preview it. If you preview it, as you can see here, chapter 1, you can go through it and start to read it and get an idea of what the book is all about. And after you've read the book, and especially certain chapters like the money management, that's when you can get into trading. Until you read our chapter on money management in that book, I highly suggest you do not start trading. And also, we show you how to incorporate these bearish and bullish sell signals and buy signals into any trading plan for whether you are a beginner or advanced trader. And if you are a beginner, all the better. We can show you ways on how to start very modestly with having rational expectations, rational goals, and that you can meet and get you started in not just Forex trading, but in getting you going in the proper way overall, period. Okay, so that is very, very big. Now, just also real quick, I want to show you from our tools navigation bar, we have the partners page. From our partners page, there's always questions about, who do we recommend? As far as brokers here, we have Forex.com. We have access to you here. Then we also have Multi-Charts, which is one of our trading platform providers. And then we also have other partners also that you can access from our website depending on the page. So definitely check out those things. We want to say thank you very much for you taking your time. And before we end the video, we want to show you this, which is really important. If you want to follow up on other videos and what's going on, Forex Trading Unlocked on YouTube, this is our channel. From our channel, we always have, just like on our homepage, our current weekly analysis video up that you can access right away. You can see the most current uploads, obviously, that are here. We did one for today. Then we have our created playlist here. We have today's lessons. We have trading lessons. We have repeat videos for the week and for the day. Daily analysis. We have other TFNN.com. These are videos from our interviews on there. We have featured channels, so E-Option, Nadex, and TFNN.com. We've done videos for all of these and webinars for all of these. Every Wednesday you can find us on TFNN.com at 8:40 past the hour Eastern Time. Once a month, around once a month, we do webinars for eoption.com. We also do webinars for the Nadex as well. You can see those past ones on our playlist. Here you can see from tfnn.com, eoption.com, Nadex and stuff. This is all Forex Trading Unlocked. We work with major brokers, all very compliant, regulated institutions. We do not deal with any of the fly-by-night, get-rich-quicker, and the shadier companies that are involved in the Forex space. Please be careful with who you do deal with. Deal with professionals. You can see that on our website. We have disclaimers all over the place. No matter what page you're on, we have our disclaimers. NinjaTrader you can download from almost every page on our website as well. Check them out. So and definitely subscribe to our YouTube channel so you know when our webinars are coming out in the future. So thank you very much for your time. Once again, I want to say thank you from all of us at Forex Trading Unlocked. High probable Japanese candlestick patterns available on Amazon.com in paperback and Kindle versions. Check it out and read it. If you're an Amazon Prime reader or member, you can read it for free. So definitely check that out. Thank you very much. I'm Teddy Keckstedt from Forex-Trading-Unlocked.com. You have a wonderful day, and if you didn't catch all this video, watch it again and from the beginning, and after that, watch it again and again and again until you get the trend dynamics and those very basic skills for beginning Forex traders. And get ready for our next webinar because we will have another one coming. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a plug for a book called High Probable Japanese Candlestick Patterns. Before we get into that plug, we just want to give you our disclaimer real quick to remind you that this video is for illustrative and educational purposes only, although it is a promotion for our book. So before you do that also, we want you to subscribe to our YouTube channel, Forex Trading Unlocked, and now we will get into what the book is all about. High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. So let's get to our live action screen. We have the Forex-Trading-Unlocked.com website pulled up, and if you go to our products, courses, and services tab, you can pull up the High Probable Japanese Candlestick Patterns page, and on that page we have a video that you can watch that will describe the different patterns and methodologies and things that you'll learn in the book. We also have a little copy of the book on the web page here for High Probable Japanese Candlestick Patterns, where you can either buy it or you can share it, but first you can preview it and check it out. And then at the bottom of the page you can also join our email list and subscribe to that if you would like, and you can also find access to other parts of our website from this page as well. So one of the reasons you want to read this book is so you can learn how to trade these signals. Now if you look at the US dollar Swiss chart from recently, we had a bullish engulfing line buy signal that had occurred here back on November 9th. We also have today a buy signal forming. The trading day is not over yet, but if this market settles where it's at or higher, that would complete either a piercing line or another bullish engulfing line buy signal. If you want to learn how to trade these buy and sell signals, then you go back, like I said, to our webpage and access High Probable Japanese Candlestick Patterns, preview it, and start learning on how you can actuate these actual trading signals. Now, ironically, Japanese candlestick patterns, which obviously come out of Japan, these methods have been used for over 400 years to trade the stock markets, Forex markets, currency markets, option markets, you name it. Well, recently, when we had back in November, we had a bullish engulfing line buy signal here that had stamped a nice low on a daily basis. And now we have today, we have another high probable Japanese candlestick pattern forming, but we have to wait for the close and for follow through. Now, if you want to learn how to apply these trading signals to either your system or to use our methodology, you read the book High Probable Japanese Candlestick Patterns, and you'll be able to find out how to actuate these trades. Now, these signals, they occur often in many markets. They happen all the time. Just as you can see, just in the month alone of November, we had here in the US dollar yen trade, we already had a bullish engulfing line buy signal formed. We have another pattern forming here. We go back to the US dollar Swiss. And we have one forming again. And one of the nice things about knowing these signals, especially like on a day like today, when you have the US dollar Swiss and the US dollar Japanese yen forming signals at the same time, they're not always the same signal, like a bullish engulfing line or a piercing line or whatever, or maybe that's what you get. In one market you have a bullish engulfing line, another one you have a piercing line. But when these all line up, that gives you a good sentiment about where, especially like the dollar would be going, because the currencies are based off of the dollar. When you have a signal, say in the US dollar Swiss, the US dollar JPY, and then also say in the Euro US dollar, if you all have buy and sell signals where for the dollar or against the dollar, and they all line up on the same date or around the same date, well, that's usually a good indication of where dollar strength or weakness is, and you can use that for options plays, for spreads, for futures, as well as the outright Forex markets itself. These can also be used in stock markets and what have you as well, but especially in the currencies, they work fantastic because you don't necessarily have to be a yen trader or a Swiss trader or a pound trader or whatever you are, but if you are trading, let's say you're a Euro US dollar trader, and all of a sudden we have this US dollar buy signal for the Swiss, and you also have a sell signal in the pound, you have a buy signal in the US dollar yen, odds are that the Euro US dollar will be trading, in at least in the short run, if there's a dollar buy signal or sell signal, that will follow through with that as well. So we'll have to learn more about that when you read the book. Or you can subscribe to our YouTube channel, Forex Trading Unlocked, because we have videos that post all kinds of analysis on the daily and weekly basis, and whenever we have trading signals from the high probable Japanese candlestick pattern book that evolve, we usually highlight them in a short-term video, which you can find by subscribing to our Forex Trading Unlocked YouTube channel, and we have all kinds of them on there. And also, once again, check out the book High Probable Japanese.
If we were meeting someone for the very first time who was just now starting to get a whiff that they wanted to be the deliberate creator of their own life experience and had just an inkling of an idea that it could be, this is the story that we would tell to them that we think would be the easiest for someone like that to hear. You're more than you know, but you've probably suspected that for a long time. But I mean, no, you are really, 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 really different than you know yourself to be. You're so much smarter and so much wiser, and you have so much more that you deserve. You have so much vibrational credentials and stuff saved up for you. There is so much good that you are entitled to. There is so much well-being that you were born knowing was yours. It's a legacy, it's gifts, it's a legacy of well-being that is huge. And I know you don't know it. I know you don't know it very well because things around you have made you think otherwise, but I know this about you. So if I were standing in your physical shoes, we would say to them, if we were standing in your physical shoes, if I were standing in your physical shoes, I would let myself hope for outrageously wonderful things to come to me. And I would test the universe. I would say, universe, if I'm so good, show me. If I'm so worthy, show me. Not if I'm so bad, make it better. That's the opposite. That doesn't work. If I'm so good, show me. If I am a blessed being, then let the blessings start pouring into my experience. If I'm wise, let me be smart. If I'm blessed, then I want to be happy. This is a story that we would tell to them. You just got to play this game a little bit differently than you've been playing it. And just the slightest little shift in understanding who you are.
$1.20 even. This would be the extreme for any rally for the euro US dollar. Unless oil prices really come down and there's a surging economy moving forward for the EU as a whole, I believe that this is definitely the buffering zone of any extended forecast to the upside. So if you want to take a low risk buy here, potentially buying it against the lows set over the past couple sessions, or maybe as we open up into today, I guess you could, it's a lottery ticket, but you never know. If the dollar index is really turning, this is probably a good chance to get in at a good pricing point. But as far as are we going to get all the way up to $1.19, I don't think that's going to happen. I think we're going to most likely run out of gas somewhere between this 117, excuse me, and 117.5. So this downward sloping resistance line, I'm pretty sure is going to contain and cap any rally that we have going on so far. All right, let's look at the British pound US dollar. This is interesting here. We have a 3 inside up buy formation here. This right here is a high probable Japanese candlestick pattern. You can read about it in the book, High Probable Japanese Candlestick Patterns, by the way, and how to trade it. So, but one thing you can count on right now is that this market has been trending lower, and we're looking for it to come rally up right into this downward sloping resistance as our initial target area. If the dollar index, like I said, is only in a corrective phase right now, it's very likely that you'll see the pound, especially with the rallying oil, get up into this area. The fact that interest rates on the market side, not the Fed side, are starting to pull back a little bit, which hurts the U.S. dollar. This also gives strength and credence to a potential stronger bounce for the British pound U.S. dollar. Does that mean we're becoming a big bull for the pound U.S. dollar? Absolutely not. For transparency's sake, though, am I long the pound U.S. dollar? We are long the pound U.S. dollar. We have been for the past 2 days, since Thursday. So, but we are not looking for a major move. We're looking to get out of it somewhere between $1.37 and $1.38 even, depending on how the next couple days unfold, and especially how the market opens up today. So right now, if you are an aggressive bull, I would use the recent swing low, because anything below here cancels this 3 inside up buy signal and confirms a continuation of what is already now a bearish trend. Remember, right now we're talking about counter trend signals. These are lower probability trades than they are when, hey, Raptor Mano, how you doing? So, in fact, I don't know if everybody can hear me and see me. If you guys have any questions about any markets, leave it in the chat box, and I will get to it as we get through the analysis today. All right. So, and also don't forget to, if you can, share and like the live broadcast or the video when it's done. And also you can post links or questions in the comment section on either the YouTube or even on the Twitch area. So, which would all be greatly appreciated if you don't mind. So, all right. Cool. So now let's get back to the GBP USD. All right. So we got through this little signal here. This kind of coincides once again with their scenarios of the interest rates getting their little bounce, meaning rates going down, pricing going up, gold getting a bounce with that buy signal. Remember, there's another one. So when you have a confluence of multiple markets, typically when you have all these signals lining up, not necessarily that they're all the same, 3 inside up or 3 inside down or whatever, but the fact that you do have coinciding reverses of trends with especially like high probable Japanese candlestick patterns of various ones occurring simultaneously or within a very short time frame, which then set up these trends. This puts up a very good scenario for a counter trend trade. So normally, if this was just the British pound US dollar, but everything else was just really getting slammed by the dollar and what have you, then you would have to look at it as maybe there's some sort of issue between the pound and also euro and AUD analysis. Yes, we will get to the, oh, you want to do the euro AUD? Yes, I can check that one out for you. So anyhow, yes, so that gives us an idea when you say, like, for instance, if the dollar once again was beating up everything, and you have a, excuse me, a signal for this one here, you would not necessarily take the trade, or you would use much more caution as far as how you would be trading it and as far as your expectations as well. All right, so we have that turn there. Now let's look at the last European component. And gold, please. All right, Raptamano. Okay, we will go back to, before we get into the US dollar Swiss, since we have some additions here. Gold is something that we talked about. We have a bullish engulfing line buy signal, which is helping to drive the price of the dollar down as we head towards this target area of 1796 to 1825. And you'll see this as we get into the Swiss franc now as well. So, what do we have here? Well, we have a little bit of a short-term top that is forming here in the US dollar Swiss. Obviously, the market's been making higher move swing highs and higher swing move lows. But if the dollar is in a short-term corrective pattern, odds are US dollar Swiss will start to slide. Now, the fact that gold is also going up as well, that also helps to confirm that this top that was set on Thursday in the US dollar Swiss is a good selling point again. So a low risk sell right now is risking a little bit above the high from Thursday and looking for a breakdown towards this 91.46 area, which comes right into this upward sloping support line right here. Okay, so we don't have a signal per se like we did have with the pound and with gold and a couple other markets that we've mentioned so far, but we do have this confluence where the other markets are starting to come off versus the dollar. We spiked high. We have two negative sessions, so we'll see how things go today. If we have a follow through on Sunday evening into Monday, I would think that, especially because we do have that one Swiss number coming out tomorrow, that the US dollar Swiss is probably going to continue at least unwinding to the downside and testing support probably at least until the market opens in the United States around excuse me, 8:30 Chicago time, which is Central Standard Time, 9:30 Eastern Time. All right, US dollar JPY, this is another one where we had a bearish engulfing line sell signal on Thursday. So this is a big deal. So the fact that this thing here is also lining up, coinciding with all these other signals, helps to reinforce once again that even though the trend right now for the dollar is up, even though the trend for the US dollar JPY for sure is up, we have a long-term buy signal right now of 113.5 to 114 even within the next month and a half to 2 months, and we have 116 even before the end of the year, definitely by early January. So at least as far as longer term trend. However, the US dollar yen has a way of slinking along and just continuing to make higher move highs and higher move lows, but it goes sideways for months. It barely takes out the high. Then it'll come and find support somewhere like around where our target area is here and probably maintain the trend higher. One of the things that is supporting this one versus many of the other currencies is that as long as oil, as we spoke about, continues to make higher move highs and trend higher, and as long as the interest rates, this one is right now helping the US dollar yen fall back. If these interest rates turn, and especially with higher price of oil, then you can bet dollars to donuts that most likely US dollar yen will do a U-turn and start heading for higher levels. And that's why we're over and all bullish, because if we get oil to break out above 80 and especially push it up to that $100 mark, then we're going to most likely see the US dollar yen pricing around that 116 level. So for you long-term bulls and long-term trend traders, waiting a week or two to see how this sell-off does or does not occur would be a good idea. And definitely if we get down towards this 109 to 109.75 area, if it holds, and then we get, say, another buy signal, like right here, we had a buy signal right here that set off this rally. This is a bearish engulfing line right here. This is a bullish engulfing line that set off the buy signal that sparked this whole move higher. Markets tend to go out like they come in, so it's not out of the realm of possibility that we do come and find support somewhere around here. Before it was resistance, now it will most likely become support to help confirm our trend idea that we're going to maintain a bullish trend, although that is not very severe. So we will have big spiking breakouts to the upside when we're riding the lower end of support, but then when we pierce resistance, it's like boom, we burst the bubble, and then we got to find just a higher move low and find our base once again and do it again. So it's a grind, looking for big dips to buy. Okay, now let's check out another part of this little area. Australian dollar, US dollar is definitely in a bear trend. Ironically, it has set a piercing line buy signal on Thursday after setting a higher move low and after making a lower move high, meaning this market is in neutral short run. It is not by any means a bullish. The fundamental economic factors for Australian dollar, US dollar are now so negative that we're looking at this as only a correction, which is probably being lifted and supported by the fact of dollar weakness. This is not an Australian dollar strength trade. This is a dollar weakness trade. But this piercing line is a high probable Japanese candlestick pattern. The highest we're looking for this to go up to would be up to challenge this downward sloping resistance line, which keeps the trend intact, which has been going on now for months. Only if we were to get above the 76.65 area will we even start to think that this market is not even bullish, just neutral against the dollar, or the dollar is that weak, because the Australian dollar right now, with the price of oil going up, is getting a little bit of a support, but the fact that the country's in total lockdown and they can't even get their oil out, that doesn't help things, so it's kind of a double negative when it comes to what's going on with that. So just be mindful of that trade if for those of you that are Australian dollar, US dollar traders. Now, we have someone who's got the euro. We got Greg Dog. You want the euro. I think you want the euro Australian dollar analysis, not just the euro or the Australian. So let's look in DAX 30. Yeah, we can do that too. We'll get to that, though, towards after we get to the cryptos, all right? But we can do the euro Australian since we've already talked about the euro. Is it showing a sign of a bounce? Well, it's only dollar weakness that would try and bounce the euro. Remember, we have a buy signal in the pound, and we don't have it in the euro. So let's take a look at this the euro AUD. So euro AUD right here. Okay, so this is interesting. Now, I would assume that because the Australian dollar has had a little bit of strength, see how this has this high, this swing high right here. We came back off of this, and now we're getting ready to test this swing low here. Should this occur, you're looking at a head and shoulders pattern right here. Here's a shoulder, here's a head, here's a shoulder, and that would confirm weakness. Now, the fact that the euro right now, if it bounces versus the dollar, we're not looking for any real strong show of strength. Remember, the EU is energy dependent. They're having natural gas shortages. They're having issues with oil and with gasoline. The same within the UK. So the euro, but the UK is fine because they actually are an oil producer. The EU is not. So Australia is. And the fact that Australia right now is coming off of a higher move low, that gives it a little bit of strength versus the euro, and that's probably why the euro Australian dollar is poised to test these lows. And I would say look out if you fail from here. You have also a head and shoulders that is taken out. So here's your neckline, and here's your shoulder. Here's one shoulder right here. For those of you that aren't familiar with the head and shoulders, this is a classical technical analysis pattern that when it does occur, and especially if it's concurrent with other sell signals or buy signals when it's a reverse head and shoulders, it's a very useful tool for projecting market trends and as far as also market pricing as far as how far they're going to go. Okay, so we're looking for the euro AUD tomorrow or tonight and see how it opens up. If it fails from this area right here, then we are going to probably see a slide down to, let's see, where is the last big low. It's a big trend change. Let's go to 50% right there. And then we'll go to 0.618. So we're using the whole length of this big rally into this head and shoulders to see where we could go down to. All right. So somewhere in this area right here is where we're looking for the euro AUD. And as you can see, this was a consolidation area prior. So it's very likely that the euro AUD, and could see how that would happen where this head and shoulders, if this is going to sell off and be true, that this is where you would find support, because Australian dollar has so many fundamentals going against it right now that the EU, even if it's bearish, Australian dollar is definitely much more bearish. And if the dollar is only in a corrective phase and then becomes a bull again, especially against the Australian dollar, it's going to hammer the Australian dollar much harder than it's going to hammer the EU. So that's something to be mindful. As far as swing trades and volatility, Australian dollar crosses, I mean, I can tell you right now, I'm in the pound Australian dollar, and we took a little heat over the past week and a half. I'm long the pound Australian dollar, and that's because I think there's more pound strength than there is Australian dollar strength, especially over the longer term. And anyhow, so that's one market right there also to look at when it comes to those crosses. Now let's get to the New Zealand dollar, US dollar, before we get into the Canada and the cryptos, the DAX. We can get to the DAX 30 as well. All right, New Zealand dollar also posted a 3 inside up buy signal right here. This is a high probable Japanese candlestick pattern. This market is kind of wedging into its bearish trend. It's coming off a higher move low with this buy signal. So this low here from 2 sessions ago will be your base. If you're an aggressive bull, this is your line in the sand. If you are bearish right now, well, you're fighting right now a counter trend trade. So, however, because this market came off of a lower move high and now a higher move low, maybe if it's set up for neutral, it is a good situation where this is set up to at least get a little bang for your buck and challenge resistance. Probably not going to get that big of a rally out of this one, but it is a good chance of at least seeing higher price action over the next couple of sessions. Greg Dog, you are welcome. All right, now let's go to the US dollar Canada. Here's where we have a setup, guys. If you want to trade, look for a trade. This is interesting because it pulls everything together. You know, I get sometimes questions from some of our listeners like, why do you talk about all these other markets? Well, the best indicators for any market is the market. Remember, we were talking about, once again, in the beginning, interest rates. Interest rates right now are going lower. Bond prices, 10-year note prices are going up. Remember, you can get all this information from the Forex-trading-unlock.com website. When you go to the markets, go to futures, and then when you go to futures, you can see the 10-year, the 2-year, and we don't have the DAX on here, but I will pull up the DAX market. We will get to that. So you can pull up the 10-year and all these markets that we're talking about and looking at. Remember, crude oil, that's going higher as well. Canada, this is a big deal. So once again, interest rates are going down in the market right now, bearish the dollar. Crude oil is going higher. That is also bullish the Canadian dollar. Remember, that Canada is a producer of oil. They're also a producer of gold. So the fact that gold's going up and oil is going up right now, and there's a little bit of dollar weakness, that sets us up for another head and shoulders pattern. Remember, we talked about the head and shoulders pattern. For those of you that weren't familiar with it, now you are. Look at this head and shoulders. This is a big deal. The US dollar, Canadian dollar has been trending lower for months and months and months and months. It finally turned at the very beginning of the summertime, setting up for what is now a head and shoulders pattern as we ended the third quarter and are now in the beginning of the fourth quarter. Interestingly enough, this upward sloping support line that's been maintaining this correction to the upside intact has been tested a couple times last week, settling right on it. We have this neckline. This from this little right here from the shoulder. Here's a neck, and here's the other side of the neck. Here's your neckline extended. This is just below it here. Very key support, okay? And then we have this higher swing low right here. If we take that out, that means that we've confirmed taking out the neckline, taking out a lower move low after a lower move high, confirming what? A new potential downtrend that will be extended. And where is our downside target? Well, below $1.2487. We're looking for a lookout below 121.16. So right now we are in a sell rally forecast aggressively against the high set from 3 sessions ago here around $1.2781. Ultimate risk to the upside is this $1.2897 area. If we get above there, well, then this corrective move is obviously a bull. You know, I mean, it doesn't take a rocket scientist to figure that out. However, as far as a low risk selling into this area right now, using that as your risk, looking for a test of support due to the fact of what's going on with the interest rate market, the gold market, the crude oil market. This is giving us a good chance at testing support, and if we take out these levels, look out below. I would assume that you probably have a lot of sell stops going on there. More quality options, please. My phone keeps buffering. Okay, not quite sure about the phone connection. Probably has to do with maybe you're mobile and you're also moving. But I don't know. Right now I know we're broadcasting and we don't have anything else running except for the stream, so it should be a pretty strong signal. But I'll check the levels in a second after we get to the next market. Anyhow, so we have this, like I said, sell scenario. I would look for support to be tested early this evening, and I would not fight this trade. I wouldn't doubt that you see some swings because you have a Canadian number coming out tomorrow. But if you look at it even on the hourly, you have lower move lows, lower move highs. You're looking to test support. Okay, so the U.S. dollar, Canada, and that helps to reinforce the selling off of the U.S. dollar as well. All right, so we're going to do a couple of cryptocurrencies before we get to the DAX, because we have a bearish engulfing line sell signal that occurred back a little while ago on, September 7th in the Bitcoin market. Ironically enough, we came right down into the buy zone from that sell signal a couple of weeks ago. We bounced off it, made a lower move high, higher move low, and then a higher move high. So we're looking to see how things go on the day today. Right now, as of yesterday, we have a short-term pause for the cause. If you're aggressive and looking to take profits right now and you're jittery, then I guess you might have, yesterday's or 2 days ago, the high may be it for the short run. So if you're aggressive short, use that high right there as your risk. And look for at least a little pullback and digestive back into this 46,000 to 44,000 area. As far as a correction back all the way down to where we found this area before, we already hit the profit target here for this sell signal. Could it go lower? Absolutely, it certainly could. Now, it would have to take out this low from September 21st here at 39,585 to be really bearish. The reason being is that we made a higher move low here on September 21st. We could just be building a base before we make a screaming new high to 54,000, 60,000, who knows where we're going. So the overall trend for the industry, for crypto, which the BTC, I always say, is kind of like the dollar index. As far as some of the technologies, we'll look at what's going on, and I think that you're likely to see more digestion going on right now, and I would not say that I am bearish the BTC right now, US dollar, but I'm not very bullish, and you'll see why when we get into a couple examples. But right now, as far as a signal, we do have a short-term pause for the cause as of yesterday's trading. We'll see, especially today, you got to realize Sunday's trading isn't over with. So for the third, if we end up going negative today, that's a big deal. If we end up closing negative on the session for BTC USD rolling into Monday's trade, then we have a potential 3 inside down sell setup happening. So I'm going to put a little arrow here. We have a potential sell signal forming. Now, you know what that means when you say potential? It means it's potential. It doesn't mean that it has happened yet, okay? So do not get in front of the sell signal, okay? That is very big. So I can't stress it enough that when it's forming, it's just an illusion. You don't know what's going on. Now, right now, it's positive on the day, so that doesn't make us want to take this sell signal at all. Could you be getting a better selling price? Should it end up lower on the day right now? Well, of course you could, but that doesn't mean that you would be right, because right now you could be selling into what could be an explosive rally that builds over the next couple of hours, making higher move highs. For all we know, Bitcoin can be at $52,000 within the next couple minutes, let alone the next couple of hours. So let's see what happens on the settlement of today and the rolling over into Monday's trade for Bitcoin US dollar. We are looking for a sell signal to emerge and be confirmed with that. So if we do have a lower close today, that would confirm a short-term change in trend, a pause, not necessarily an overall bearish signal for the trend, but for at least the next couple days, maybe a week, see lower trading prices. All right, ETH USD. Let's look at the ETH USD. Or actually, you know what? Let's go to Doge. I'm sorry, first. Doge US dollar. All right, so the Doge US dollar, this one is definitely sliding lower with lower swing highs and lower swing lows. It had the pause for the cause off of the bounce yesterday as well. Kind of neutral today, looking a lot like Bitcoin, only it's been trending lower. And that's where I think the whole industry as a whole